Hey guys, how are you? Vladimir Ribakov here from Traders Academy Club. This video is a weekly performance review of Triple B, Forex Triple B, and we are on the week of 20 to 24 of January 2020. The purpose of this video is educational, is to explain the logic and the steps behind our decisions we have when trading. As you know, we pre-analyze the market, choosing the instruments we want to trade with, choosing the directions we want to trade, and then we are waiting for the Forex Triple B to give us the alerts in this direction, and then we trade it. So right now I would like to go over these trades and to explain the logic behind them, why did we trade them, and what was out there on the market in the general analysis supporting our view. All the trades that we took, as always, are available for you in the Forex Triple B website. Go to the performance and you will see the trades. You basically click on the image of the entry and the image of the exit, and that's pretty much it. So let's start the first, as you can see, the yen pairs were the rock stars of the week, and I would like to explain them quickly. For those of you who follow my live trading rooms in Traders Academy Club, know that we were bearish on all the yen pairs, and here is the analysis behind it. So the first one was the New Zealand yen. Beautiful trending structure to the downside with two waves correction, 3 lower highs, 3 lower lows, trending conditions, 2 waves correction. The Bollinger Band slope on the 4-hour chart, as you can see in the middle here, turning to negative zone, and the idea is easy go for a sell. This trade paid all the way to the downside. What was there with the analysis that made us looking for the sells? So the way I analyze that, we basically have here a cycle with the bearish divergence. Adding to that the fact that we are bouncing from this massive resistance zone, and the 4-hour chart before that got us 3 lower highs, 3 lower lows with 2 waves correction. Basically what happened since this moment, we broke below this trend line. It is a bearish divergence and a false breakout on the top. Classical bearish conditions. Right here, as you can see, we changed the slope to negative. So the idea is easy. We are after sells. And that's pretty much where we got our alert. Multi-time frame analysis provides us here a classical sell opportunity where all the time frames are synchronized to the downside, both on price action and the indicators. The decision was easy. It's a sell and we got paid. Next one was from the same family. That's the Aussie versus the yen. Lower highs, lower lows in place, 3 lower highs, lower lows, and 2 waves correction. Another very interesting fact that I like is that we reached this resistance zone and we are, as you can see, holding it. The slope of the of the Bollinger Bands, the second time I'm confused, become bearish, and this trade is easy and pay. What was the analysis behind this pair? Exactly like the New Zealand yen, but also like the Euro yen, which we will see in a second. What we got here is a triple cycle. Easy decision to go and look for the sells. We have a massive divergence here. The first leg down on the daily time frame was 3 lower highs, 3 lower lows on the 4-hour chart, basically verifying the trending change. We got 2 waves correction, and like in the case of New Zealand yen, a false breakout followed by a bearish divergence. At that moment, we started to go down again, creating again lower highs, lower lows in play here. The slope becomes bearish, and this is an easy sell and a great pay. The next one was dollar franc on the buy direction. We got here higher highs, higher lows for trending structure. 2 waves correction, false breakout, which I love a lot. Beautiful bullish divergence. The slope on the 4-hour chart was bullish, and unfortunately this one did not work out well and spiked below the 20 MA. Later on it did continue higher, but in that case we didn't manage to make the profits out of it because it first of all went down and spiked through our stop loss. So as you can see, despite the analysis, despite all the bullish conditions, the market didn't agree with us, and the slow movement based on the Bollinger Bands triggered the stop loss. So does that mean the analysis was wrong? No. It's part of the game. There will be trades that everything looks perfect and still fail. It's part of the statistics. We cannot avoid that. What we can do as traders is always stick to the rules and continue. Despite a loss here and there, just work clean on a multi-time frame synchronized analysis, and remember, positive and negative numbers are all part of the statistics. Next one on the list was the euro versus the yen, and before I explain the trade itself, the analysis here also is bearish, as we got 3 higher highs, 3 higher lows, triple cycle, bearish divergence, false breakout on the very top, and a bounce of around number 122.50. The next step was the 4-hour chart that completed a false breakout here on trending conditions by itself and turned around to the negative zone by creating the lower lows. Moreover, we started to create 3 lower highs, 3 lower lows to identify bearish trend. It was easy call for looking for sell direction. Then on the trading opportunity, we got as the lower highs, lower lows, 2 waves correction. It is an easy decision. As you can see, the slope changes, and it's everything again is fully synchronized in the sell direction, and we got paid. This was a very fast trade. As you can see, the momentum was gained pretty quickly, and we got paid pretty quickly as well. New Zealand yen provided a second opportunity after the one that we already were involved with, and with a new trending structure. As you remember, we traded the first one, recreated the trending structure, 3 lower highs, 3 lower lows, 2 waves correction. The slope is yet bearish. The higher time frames support the bearish view, as you already saw. It's an easy decision, and we got paid again. So yes, in that case we also enjoyed real trending conditions. As you saw in dollar franc, despite trending conditions, sometimes it's going slow. In that case, the yen pairs this week worked pretty amazingly. Euro yen re-provided it once again a day after, and the same story, a new trending structure, 3 lower highs, 3 lower lows, again 2 waves correction, back to the resistance zone. The slope is massively bearish, as you can see. Again, an easy decision, and again, this pair pays. Same exactly with the Aussie yen, not going to waste your time on that. The higher analysis, you remember. And again, 3 lower highs, 3 lower lows, 2 waves correction. Easy decision to go for a sell here, and we got paid. So yes, the yen pairs really were phenomenal this week. For trending conditions, it was super easy. And the last one comes from the oil, where we basically enjoyed the lower highs, lower lows pattern here with deep 2 waves retrace back to this resistance area. As you can see, the slope from the 4-hour time frame is super easy and good, and the idea of a sell is again easy. Now on the analysis, what did we have? We have the trending structure from the 4-hour chart, which gave us 2 waves and breakdown for continuation. So our assumption that this is now developing a cycle by itself. It had no signs against us here, no ending divergence on the move down. So our assumption is that we continue for the sell, and we started to recreate the lower highs, lower lows, as you can see. And this pullback that we see here, right, provided us the bearish hidden divergence for trend continuation. Simply fantastic, and a wonderful opportunity to enjoy from and to join the higher time frame. So once again, as you can see, we pre-analyze, we understand the directions we have, and we wait for the synchronization in the same direction as we analyze. Once we get it, boom, we hit it, and when the market is moving and the trends gain momentum, the profits starts to show up and accumulate. So it was fantastic fantastic trading week using the Triple B. As you can see, out of 8 trades, 7 winners. Yes, majority of them are the yen pairs, but do we care of the name of the instrument? The answer is of course not. What we care of is classical technical setup synchronized on multi-time frame analysis exactly as per the rules I teach, and then wait for the Triple B to give us the direction, the signal in this direction, and look to trade it. That's it. For all those of you who have the Forex Triple B license, I invite you once again to join our Telegram channel, where you are able to ask all the questions, share setups, ideas, ask about setups, and to enjoy from setups me and the other team members share in the community. So that's pretty much it. I hope you find this video helpful, useful, educational. You understand the logic behind the steps, how everything works, how do we find our trades. This week was really phenomenal, and we enjoyed it, and I hope you did as well. If you don't have the Forex Triple B and would like to join our community, then you can find a direct link to that below the video in the description or in the pinned comment, including the option to get it free with the Brokers program. Thank you very much for your time watching this video. I wish you a fantastic trading next trading week and a wonderful weekend, so have a great rest. I'm Vladimir Ribakov from Traders Academy Club, and I'll see you next week with more videos. Bye for now.